Boom, we are live, ladies and gentlemen. We're going to be taking a look at Bitcoin's price. Is this the bottom? You'll find out here soon. Taking a look at Bitcoin on the daily, we have our VPVR on the right-hand side. We've been following what appears to have been a pretty significant distributional event and wondering where it's going to go next. On the right-hand side of the screen here, you can see that we have the VPVR, which is this blue and red area. This shows where the majority of buying and selling has taken place within this most recent market cycle. So there's significant support down at around 68,000, and where I've written breakdown or hold here at 96 to 99,000 is a really important area. I'm going to turn my bear claw back on, which is free to all of our private members. And what we're going to do is take a closer look at the VPVR here and its support range. So again, on the right-hand side, up around 68,000, upwards of around 84,000. There's a big gap down here. And what we're doing is now moving in towards the point of control back at around 96,000. So when we look at regular distributional events, we often see a sharp move to the upside in phase E, a retest of the VPVR, and then a drop all the way back down. So you can't see this. I'll have to move my face over to the side here. Maybe that, there you go. That will be helpful. But a phase E breakdown here would likely bring us all the way back down to that $60,000 area. So it's really important that this next little bit, we find a breakdown or hold scenario for Bitcoin. So as I scroll back out here, and this becomes a little bit clearer, the breakdown and hold scenario, we've bounced off around 84,000 to 81,000, and we're probably headed up to around 96 to 97,000. If we can't hold above 97,000, we're coming all the way back down to 70,000. And we could make an argument for a few potential things that will happen here. Now, it's hard to predict too far into the future, but Bitcoin is still one of the best assets over the long term for how the world is likely to operate, which includes a lot of money printing in the future, a massive amount of deflationary pressure coming from technologies like AI, and the need for some type of inflation that will keep up with that deflationary pressure, which is the likelihood of massive amounts of printing coming in the near future and checks being handed out probably to everybody. So what's the next likely step? Next likely step, in my opinion, is we jump to around 96, 97,000, and we either form a reaccumulation range or we hit another distributional point and turn all the way back down to the bottom. If we take a look at some of our oscillators here, the stochastic RSI, this one here, let's make it a little bit bigger. The stochastic RSI on the daily is moving towards the top. It has not peaked up yet, so I suspect it will continue to move a little bit higher. The MACD is crossed over, but still a long ways away from the bottom line, the middle line here. Once we cross over the middle line in the MACD, the upward pressure becomes significantly stronger. But for now, all we're doing is crossing over. We'll have to make a few more steps to get anywhere near the middle line, although it can happen quickly. Going back into the 4-hour, we can see we've actually hit the exponential moving average resistance lines as well. We're moving into peaked out territory on the RSI. The stochastic RSI is turned down and looks like it wants to reset. So we're in some pretty important areas here for testing whether we continue to go further down to that $60,000 to $70,000 range, or can we hold between 86 and 91,000. So this will be the next big check here is, do we hold between 86 and 91,000? And then can we get back to above this $97,000 mark, which we're not too far away from, but $97,000 on the longer time frames here is a pretty key area of significant support on the VPVR. So here, as you can see, again, just a bit clearer, there's no real support in this area that we're in now until we get back down to 71,000, and the potential for an emergence of this full-fledged phase E where we drop all the way to the bottom. Now, what's important to remember here? First off, the schematics are not the only thing that we're interested in. the horizontal trading ranges, although they're important, one of the most significant effects of the Wyckoff methodology is understanding effort versus result within the supply range. Here we see a massive amount of supply coming into the market, all to the downside. Very little buying pressure has pushed us up. Now, as we look at the 4-hour, we can actually see that we've recovered the majority of this downside movement, which is a significant amount of sell pressure with significantly less buy. So this does indicate, at least temporarily, that we have entered a bullish recovery on the 4-hour. Now, on the daily, we do not see the same amount of buy coming in to the market yet, but that's not to say that that won't change. Again, the stochastic RSI on the daily has not totally got into the oversold area, but even more importantly, the weekly has been oversold for a really long time. Now, the scary part here for the weekly is that the MACD, for the first time since the beginning of this bull market, all the way back in 2023, has crossed over the middle line. And usually once we cross over in the middle line, it's not a great sign. But we are holding currently the EMA bands on the weekly. So there could be a story of where we hold between this $86,000 and $97,000 area. We recover, and this just ends up being a smaller reaccumulation after the breakdown of the price. And we've seen these before. But before we get more data, it's really hard to tell if this is the bottom or not. There's not a whole lot on the weekly to hold us up. And again, the significant shelf is around 70,000, but even more importantly, down near 40 and 50,000 are also markers of potential. If we look at previous bull markets, we've followed the 200 simple day moving average as a damn near bottom of the market every time, which would, if that were the case now, would put us at around $55,000. I don't think that that's where we're headed at. Something feels like there's so much buying pressure and necessity for assets like this that we're going to continue to go up. Even if we range here between that $70,000 and $97,000 area, building a secondary trading range, something similar to this here. I'll scroll back to the daily. Something similar to this, where we see a type of reaccumulation after the decline. And we'd seen this in the past. So just as an example, on the right-hand side here, I'll zoom into this particular portion of the range. We saw this in the past. There was a nice, let's take the bear claw off here, and we'll make this a little bit fatter just so it's clear within the image. Boom. So here was a distributional event. Very shortly after, we went into a reaccumulation bar right after. So it's not always that distribution phase E's continues super deep before turning into a reaccumulation pattern. This is a perfect example of that, where we saw a beautiful distributional pattern instantly turn into a reaccumulation, and then a breakout, followed by a short-term reaccumulation, and then what now became distribution. So it could be that what we end up doing is forming another reaccumulation pattern somewhere within this $81,000 to $97,000 area before continuing up. But we're not going to know until we get a little bit more data on the volume and supply signature. So keep that in mind. Let's deal with the Arcane Bear. I've got a private newsletter coming out this week for you guys. And remember, for the next little bit here, we're running a 60% off any of our memberships. So if you want, you can still use the code HARDRESET to sign up and get 60% off, whether it's monthly or your yearly annual subscription. We'll see you guys again on the next episode.